As always, really appreciate when people, consistently provide feedback and ideas. And hanging out in our member room today, well, I already know who's there. I know Stardust is there. I know Connie's here. I know Doji's here. I know that Randy's here. Good morning, everybody. Eric in Northport and Secret Agent Charlie. Hey, I was told that I have to use this. Now, I'm going to try as much as I possibly can, but I know that a lot of you use this guy. All right. We're going to work on this. It's going to be a slow process. Remember, I've spent my entire career in FinViz and TradingView, but we will work with Thinkorswim as much as we possibly can in the mornings. Everybody happy? Everybody clear? Everybody good? September 19th. Funny. Morning momentum. We'll talk the runner at 9 o'clock and triple witching. What the heck is that? Well, it's a good thing that we actually know that. So we're going to walk you through that and what to expect. And I'm going to be back at 3 o'clock today. And that's important because that is the witching hour. This is a good reminder. This is not just about 9:30 today. This is about the whole day. And if you're not a member of TheoTrade, if you're not in the room with us today, then I don't really know what to say about the other 364 days of the year because today really is an education in how markets work and how positioning works and how funds position themselves after Fed meetings and how all of the options and expiration of today, which I'll explain momentarily. Today is that if you have ever been curious about how the markets work, today is the day to do it, right? We're going to be talking about all day where smart money is positioning, where money is cycling during the quarter. We're going to go through our top screens, our stocks, our trade strategies for the day. But you got to be in the room with us from 9:30 to 4 o'clock. And I stress that last hour. I stress that lunch hour. And I especially stress those first 20 minutes this morning with Don. Remember, if you start looking at your portfolio at 9:30, it is just too late. I can't help you. I can only help you prepare. Momentum this morning is green. No shock here. Again, we continue to just monitor the exact same thing over and over again. And if we just look real quickly at the SPY, nothing comes up. Loving it. Right now, looking at the SPY across the board here on the drawings. Remember, volume weighted average price, we have a simple setup for that we can use with Thinkorswim. We do the same thing with TradingView, but again, making sure that we are focused and following this line, blue line across the board, looking at the SPY right now and looking at futures. 6704, not shocking. We're probably on our way to 7100 with momentum remaining very, very strong. And you can see on these key moving averages, just holding above that 8-day EMA, holding above that 20-day EMA, strong momentum, continued momentum. That is what we are looking for at all time. Okay, we will make sure that we have a Thinkorswim desktop version on a laptop. Guys, we'll take care of it. Okay, it's a process. It's a process. It's a process. FedEx earnings. That's what matters. We talked about this at the end of the day yesterday. And highlights revenue 22.2 billion, increasing year over year. Adjusted EPS 3.8, beating expectations. Operating margin up 5.8%, up from 5.6%. We talked about this yesterday. Last 20 minutes of the trading session. Margin pressure. This is very important, right? If you really want to dissect a company and understand how that company impacts both the global economy and the stock market, your little pie chart, or what is that called? I forget. I haven't been in eighth grade in 20 some years. We're looking for the thing that connects the stock market to the economy, and that is FedEx and its operating margin. So again, the way that they are more synergistic, the way that they are cutting down on things at the moment, making sure that they are passing on their prices, those increases, those inputs to their consumers, and the consumers are still paying it. Very important. U.S. domestic packages were up 5%. International export volumes, however, falling. And as they said, the de minimis exemption, that means smaller packages that do not face tariffs, expecting $150 million impact in the first quarter of their fiscal year. Now, outlook and strategic, full guidance up 4 to 6% in revenue growth, very strong EPS. They are focusing on cutting costs, $1 billion versus their drive and network 2.0. Today's going to be a very important day watching this stock and what the behavior looks like for this stock moving forward. Because again, this is the bellwether for the economy. This is the bellwether for outlooks and expectations internationally. This tells you a lot about inflation, about costs, about everything else that comes with it. So be very, very, very well aware of what is happening with FedEx today. We had a big pop to start the day yesterday or after earnings, and then we hit that 200-day moving average, and this stock has pulled back since. Pay very close attention to this. This is a volume weighted average price name for today, looking for opportunities as they emerge. If this stock does sell off, again, risks remain the same: tariffs, global trade, rising costs, and the opportunities are in package strength and higher yields per package. That doesn't really matter to traders. What they should be focusing on is price, but you should just be paying attention and be aware that this annual headwind from the exemptions is significant. They are trying to focus on ways to impact their business in order to address margins. Every single company in America is now going to be looking inward right now, thinking about the strength, true strength of this economy, looking at the differences between its domestic and international, its guidance moving forward, and the risks from wage inflation, labor costs, fuel costs, trade policy. All of these things do matter in a momentum driven environment down at the microeconomic level for a company like this. Now, today is a very special day in a boy's life. It is triple witch. Okay. Why does that matter? Okay. Venn diagram. Thank you. I appreciate that. What is triple witching? It is the simultaneous expiration of stock options. Think Tesla, stock index options. Think the S&P 500, and think stock index futures, futures for the S&P 500 as well. Now, I'm not going to bring up the fourth one because I will get yelled at. So we will not talk about that. But there were some people out there who called this quad witching, and they were punished for doing so. So don't do that. Whatever you do, it's triple witching. Stock options, and index futures. Okay? Peter, don't say that. Don't say that, Peter. You can get banned for that. Put a bucket on your head, turn you around on a horse, and send you out into the wilderness. All right. 4 times a year this happens. And there is volatility typically around these days for good reason. The amount of money that is sloshing around. It will be trillions of dollars in settlement today, which is very, very important. Expect higher volatility as contracts expire, especially in that last hour of the day. And that is what we call the witching hour. That's where we see a lot of movement. Guys, I'm telling you, don't say quad. Don't put it in the chat. I don't know why you're even like, do you understand that Don, his face, it's his eye is going to start twitching, and then he's gonna step in. He's gonna drop in off the headline. If you can see my computer, there's a quiet little screen, and Don can pop up at any time and take a shot at my haircut, take a shot at so many things. So do me a favor. Don't bring up quad. Don't say it. Don't talk about your quad muscles. Don't talk about quadrilateral shapes. Don't do it. Come on. Large institutional players will rebalance and unwind hedges today. Short-term price swings, not always tied to fundamentals, and the implications today are pretty simple. Short term, expect wider spreads and faster moves as these days move. This is a very good day for volume weighted average price trades. Okay. Long term investors don't, who cares? Volatility is mechanical, right? On a day like this, the opportunities and volume surges, but be aware of reversals. And as I said, we look at trading view and we are looking for moves that are basically just built around these deviation lines. And this is set up in Think or Swim, right? You can set this up. It's pretty simplistic. You use, in order to do it, you will go into settings, Forgive me, you will go into studies and you will add all three volume weighted average price levels, one, two, three. And then each one that you click, you need to ensure that your standard deviation lines, you want to have one set up for -1, and +1. You want to have one set up for -2 and +2. And you want to have one set up for -3 and +3. And it mirrors what we have here on TradingView. Now, I grew up in the East Coast, even though I spent some time in Chicago, and we wear tennis shoes. We don't wear sneakers. Okay? We wear tennis shoes. So this is very important, right? It doesn't matter which tool you necessarily use. It just matters that you know how to use the tool. Call it whatever you want. You want to use TradingView, you want to use Thinkorswim. Both tools are very effective. I have just been trained on this, and I'm going to start using Thinkorswim a lot more in the future because I know that that's what our audience utilizes. But just again, if you're setting this up, we have a full video for it. It's very simplistic, and all you're looking for during the day are these moves down into the third or fourth standard deviation. What you're seeing around these are Bollinger Bands, very simplistic. And we're simply looking for, as Don and I were on the air the other day during the Fed meeting, we saw this big sell off. We saw this move outside the second bands, outside the second band, outside the second band. And the move on the 652 went from about $1.10 up to somewhere around like 450, like a very significant move in a very short duration of time. These are the types of moves we're looking for, not just in the SPY, but in names like Tesla, Nvidia, Apple, virtually everything that has options expiration today. The key point here is you're looking for these moves across different equities down into the third band, especially into the fourth band. And then you're looking to buy a call specifically at this at the money level down in the fourth deviation line, and then you're looking for a reversion. Pretty simplistic. Okay. So as we move through this day, there will be more opportunities as volume surges. I am not looking for reversals up here. I don't trade up in the fourth deviation line because strength can beget strength. I am looking for the very reversals that Stanley Druckenmiller has talked about constantly. He talked in 2018 on Real Vision in an interview explaining that it's been very, very difficult since 2016 for traders to effectively follow trend to the downside because algorithms are programmed down here to either cover or buy the dip. And resultantly, this is how you see an equity or a stock potentially move 4 or 5 points in a very short duration. Why do you want that? Because again, very tight stop, buying at the money, and just looking for the reversal if it comes. Now, on top of that, why does it all matter today? Well, what makes today so important is the coinciding of the Fed rate cut that happened on Wednesday. You have this huge Intel and Nvidia deal that has really helped spark a tech rally. And you have oil demand concerns that are capping the energy sector. So we're going to keep our eye on technology. We're going to keep our eye on energy. And as always, we're going to keep a very close eye on rotation as consumer cyclicals and communications, the two primary momentum, two of the three primary momentum sectors, one, two, three. You see technology, consumer cyclicals, and communications. When momentum turns positive, when momentum is strong, these are the stocks that run, and consumer defensive tends to lag resultantly, as typically does healthcare as well. So again, expiration may amplify these market themes. Watch for unusual volume into the close. Watch for these types of moves. If we are down here in the third or fourth deviation line at the end of the day, don't be shocked by a move back to VWAP. And if we're up here, don't be shocked by a move back to VWAP. Give me 1 second so I can yell at my dogs. Thank you. All right, we are unmuted. They're upstairs barking at something. All right. So 9 o'clock. Let's do it. It is runner time. Shut up. That's exactly what I sounded like too. All right, RMAX. This can't be right. This is yesterday's. Nope. Try again. Try again. Mm-mm. Wrong horse. We do have a Chihuahua. She's the. Do we have a Chihuahua mix? Wrong one, sir. Please drop the correct one into the chat, or I will do it. I'll do it right now. We have two dogs. We have a pit bull. What is she? She's a pit basset, and then the other one's a Chihuahua corgi. And she's from your island, Don. She was a Hurricane Maria dog. You want to see a cool dog? Look at Jordan's dog. Um, what am I looking for? I'm looking for the runner here. Let me make sure that this is right because we had the wrong one in here. There we go. No, damn it. Okay, to hell with it. You put it in there. I'm moving on. All right, what do we got first? DMLP. So this is an MLP that we have talked about on a pretty consistent basis. Short Dorchester Minerals. I've been looking for a bottom for this stock for the better part of 3 weeks. So DMLP, really strong MLP, 12% yield on this stock. This is one of those names that you want to buy, hold, and set a stop back at around 24. We have seen relatively strong insider buying on this stock over the last couple of months. We're going to pull that up real quick. One moment. See, now I'm all flustered because these damn dogs. There you go. $25 director CEO bought at 29 $100,000 in shares. We've seen $400,000 purchases at the $34 level as well. Again, looking for strength coming off the backside of that move above the 20-day moving average. Again, EMP places, I continue to argue and advocate that Energy Transfer and EMO are better stocks. But if this is a name that is starting to find a little bit of strength coming off of that $24 level, I want you to just be cautious of this. We're trying to get back above that 50-day moving average. It's kind of one of these days where, the names that are going to come up on our list and breakouts, they're going to be a little bit unusual, but you have strength in the RSI, the MFI, the MACD, and a little flat on that ADX. Moving on to NNOX. Don't know what you do, but once again, nano imaging, healthcare devices pushing above. We're looking at that push above that 8 and that 20, buying the stock and simply hoping that we push above this 435 level, hoping that we can get back up to that 20-day. Buy the stock, set a stop back here at $4. Very exciting. I'm going to go a little bit off course on what the run tells us to do because there are other names that I want to pull into focus as well. Micron is back in focus. Big move on Micron, a lot of strength, continued strength. Pay very close attention to this because this can break down relatively quickly. But these are strong momentum stocks, and strength creates more strength. If this rally continues, look for that to continue as well. Looking at Coinbase as well. Coinbase breaking this 8 20, 25-day moving average. Currently, 326 is your stop. I like this from the upside. 340 call into 2 weeks, selling the 345 or the 350 out 2 weeks, now pushing above these key moving averages. If this can stay above its 8-day moving average, there is ample upside for Coinbase after that sell-off that transpired at the end of July. On the small cap side, Prime. This is a reminder on why we have to watch insider buying. And it doesn't matter what our bias is against the name. What we are looking for, and this is very simple, if you see biotech stocks that have massive levels of insider buying, and you see this move right here, that EMA, that 8-day EMA crossing over that 20-day EMA, kind of has a nice little, I don't know what that term is. We'll call it a swoop above that 20-day. What happened with Prime? We've talked about this. I've talked about this name for the better part of 2 months. PRME. What do you do? I don't care. Insider buying monstrous on this name, going back to the beginning of August at 330. What happened here in August? The stock sold off. You have to add it to your watch list. It swept down, it came back up, 348, took us to 517. It is basically on the verge of breaking its annual highs. And Gianni, get in here on this biotech breakout name, PRME. Finally, pay close attention to Palantir. Okay. The strength is still there and it's pushing back above. Oop, what's that called? A swoop? Will Nike swoop? Will Nike swoop this? Eight above that 20. Continued strength on Palantir holding above that 50-day EMA. Continued pressure, a retest back up at that 190 level. Looks like it's there. On the downside, why, Disney? What are you doing? Well, I'm sure they messed something up. I, I don't know what they're doing. I don't understand this company. This seems like literally the easiest business in the world to run. The entire premise of this company is to find out what your psychological level of finance is that you are willing to pay to make your kids smile. And then they find the way to push you over that line. Have you ever been to Disney? You're like, I'm going to only spend $1,000. And then you look at your credit card 2 weeks later and you go, what the hell just happened? Because they tap into the smile of your child. And it doesn't seem like that hard of a business. And yet they screw it up. Disney continuing to weaken, move down 8 day, pushing under that 50. I think a test of that 110 level, buying the 115, selling the 110, going out to the first week of October on the put strategy. Looking for continued weakness in Disney. I don't know how they're going to recover. Football season is already shaken off. All the focus on ESPN is now out. And again, I don't know why ESPN got into gambling. It still doesn't make sense. They still need to just shake this company out, split ESPN off, and then focus on making really bad remakes of classics that make me upset. Play. Dave and Buster's, you still owe me money for the back injury on that stupid horse machine 15 years ago. But that said, continued breakdown in play. I'm looking for somebody to call a bottom on this, but no one really seems to want to. This is listed as a communication services stock. It's not. It's consumer cyclical. Looking for a continued move down. I think we can push that April level down here at that $16 level as well. All right, the watch list, the names that we got to pay attention to. Who's yelling at me in the chat? Hopefully something. Did he say PMRA? No, I said Prime, PRME. Hmm. PRME. And once again, it's all about the insider buying around these stocks and then looking for breakout conditions on those names once they push above those 8 and 20-day moving averages. Key stocks to pay attention to. And look, I don't know why everybody keeps making their tickers this long. Stop doing that. Did we run out of combinations? Why do we need, like, we're on our way to this. They're going to start. Ugh, I got nothing. FLUR. Engineering. Looking for the 8 to come back above that 20 like this at the 41 to $42 level, selling at the EMA at either 44 or 45. So buying in the money, call in the money, maybe out to October 19th, 41 or 42. 42 is probably better because that's where the EMA is, and looking to sell up at the 45 level. If it's only 42.50, fine. You're fine. Stay in the at the money or in the money and sell out of the money and look for continued strength. Keep a tight stop back here at that 20-day EMA. DGICA. Where do these names even come from? Who are these people? Donegal Group, financial property casualty. Look, these are not stocks to trade. They're just not. They're financial property and casualty stocks. And once again, what we're looking for on names like this is a break above the 8 and the 20-day EMA. That's where to enter the names. We're a little late here. If you want to try to ride this thing back up to around $21, your stop is going to be back here at the 8-day EMA. And as you can see, these stocks have really a name like this is really broken out once it cracks above that 8 and that 20-day. These are exactly the types of moves that we're looking for. 15 took us up to 19 in about a month and a half. Right now, we've gone from about 17 up to 1950. There could be continued strength back up to that $21 level. Fox A, man, Fox A. Yeah, all right. Same thing. Positive crossover, $59. Buying the 59, selling the 62. Looking for continued strength in Fox. You have strength on the RSI, strength on the MFI. Looking like the MACD is going to flip over soon. Give us a positive histogram. ADX looking good. I actually do like this. So buying at the $59 level, selling up here at the 62, using that 62, the money that you generate off of that in order to help provide a little bit of a stop back here at these key moving averages. Finally, RXRX. This is pretty simple. This is just literally about trading NVIDIA without having to trade NVIDIA. We're back to $5 now. We've talked a little bit about this. We are trying to now get above that 508 level on that EMA. Very important. We get above that $5 level. Well, now we're talking about a possible move back up to 580. Doesn't sound like a lot, but 80 cents on $5, pretty good. Pretty good. What is that, 18%? So why not? RXRX is a stock that is legitimately following NVIDIA because of the involvement of the CEO and the investment that has been made. This is a backdoor AI play that nobody seems to want to talk about. And we have seen some pretty violent moves on RXRX, making $2, $3, $4, even $5 in short duration time. If we can get back above that 50-day, we have a clear upside here, like the strength on the RSI, like the strength on the MFI, the MACD. I like this stock as a long as well, but I'm simply going to tell you now, if you go long RXRX, please understand that this is going to chop around and be very volatile. And I'll just pull it up on the insider buying side right now. This is a stock that people are paid in, so they are constantly selling it. When the insiders do step in, I will let you know. On the 13Ds, we have seen chops, a lot of selling, but all this goes back to February. And we are just simply looking to trade the momentum and trade the individual equity. I don't know how long it's going to take until they're finally successful in what they do. But if you just focus around the key moving averages up to the upside when you push above the 50, the 20, and the 8, short it to the downside when you break under all of those key moving averages as well. RXRX is a ghost print. Now that is a good time. That's exactly what you should be looking for. Massive short flow too. Look at that, 37%. That sounds like a good time. All right. Last couple of things. Let's take a look at insider buying. Now remember, we are at the end of the quarter. Insider buying to selling has been weak. I remember one of the first times that I ever talked to Don. He goes, "So wait, what do you follow?" And I said, "Well, I've been following academically insider buying for a long time." He goes, "Well, I don't really find that interesting, but I bet a lot of other people would." And it's like, okay. Once again, insiders have called the bottom of every market going back to 2008, Lehman Brothers, March 2009, the ECB crisis in 2011, the China crisis in 2015. October 2018, COVID, what happened in 2022. And obviously, the most recent one is here on April 8th when insiders bought at their strongest level since December. Insiders are not buying right now. Again, the market is at all-time highs. We have ample amounts of liquidity. And we are now going to be heading into the next couple of weeks, earnings season. So, again, it's going to be a quiet period, but we do want to pay very close attention to what executives are buying at all times. And then, of course, take these names and add them to our watch list and specifically look for exactly what I just laid out with Prime, right? So Prime has this massive amount of insider buying back here in August. It gets its pop. And this is the thing that happens with insider buying. Everybody gets excited about it, it gets a pop, and then institutions that have been holding it back since back here, they miss the opportunity to sell it here. They sell back into that positive optimism, and the stock rolls over. It doesn't change the fact that the executives bought the stock with a long-term outlook for a reason. Remember, executives buy their own stock for a reason. They think it's going to go up. So, what are we always looking for? We're looking for these rebounds. We're looking for the positive momentum to return to the stock. This stock bounced off its 200-day moving average twice, then started to see stronger momentum and went from 350 up to 517. And again, all you're doing at that point is buying it as we have that crossover back above the 20-day moving average, and then using the 8-day moving average as your exit point, right? So this breaks out at the 20, but you allow the 8 to take you higher, right? And if this rolls back under the 8, just keep this in mind. In this scenario, let's just imagine today you bought this stock at 350, right? It breaks out, it gets to 517, and then tomorrow, or forgive me, on Monday, it rolls over from 517 back down to the 8-day EMA, which will probably be somewhere around 4.7 on Monday. It falls to 4.7 and it breaks under that EMA. Well, again, you've made 350 to 470. You made $1.20 on a 350 stock. That's trading the momentum that we are focusing on. We are using the 20 as an entry and we are using the 8 as an exit. And you can do the exact same thing with the 20 and the 50 if you want, right? So here's another example of that. Breaking above that 20-day moving average, breaks above that 50. Here's your 50, which is going to be your stop, right? 155. Well, this stock breaks all the way out and then ended up bottoming at that 20-day moving average at 3.8. And there's a lot of different strategies that you can do around this. I tend to focus on more conservative stocks. I tend to focus on stocks with high F scores and low gram scores. But you can do it doesn't matter what you do it with. Turn to what's going on with insider buying, next decade, NEXT. I don't know what you do, right? Completely bombs out. What are we waiting for now? We've added this stock in the back of our brain to looking for an opportunity where the stock will see its 8 cross back over its 20. And these are the types of moves that can be produced, right? A 750 to an 870, entering at the 20, exiting at the 8. It's very conservative. It doesn't take a lot of thinking. You're just simply trading around individual lines and you're keeping a relatively conservative strategy in place so that you don't have to overthink this. You know what your entry point is, you know what your exit point out, and you're done. And that's it, right? That's it. That's all we're trying to accomplish. So keep an eye on next. Add this to a watch list. Don't buy it. Wait until this all normalizes, and I assure you it will at some point. Even though we are oversold, now is not the time to speculate on a stock that's currently getting its head kicked in. Finally, Kura, Kura. I don't know what it does. Oncology. Sounds great. Okay, so what happened here? This company was bought by its CEO at 820. Okay, 820 right here. Well, if you're going to trade around this and you're going to try to trade the momentum, pick another line. And in this case, it's your 200-day moving average, 845. And you buy it here and you hold it here. And if it breaks under the 20-day, you get out. Like if you have to have a trade, you have to adjust and you have to think about all of the different mechanisms that come into this. I like the fact that the CEO of the company is buying into strength. That's very good. But I'm not going to get blind around this because if it starts to break, if I buy it, I have to draw a line in the sand. Either it's going to continue to break out or it's not. And again, take all of these names: Star Equity, Dollar Tree, Aardvark, Solaris, Cura, Blackstone. Take these names and run it through the Ghost Print scanner. Get the Ghost Print scanner and run these names and look and see if there's anything unusual or anything that's popping up and build trades around this, because again, the CEO and the CFO have the conviction. Nobody knows the business better than the CEO. Nobody knows the balance sheet better than the CFO. That's what we're aiming to do. We want to take as many different points of data as we possibly can, and we want to build conviction so that we have a high probability and high focus on each trade to give us the confidence that we need. All right, everybody, it is 9:21. I hope everybody has an awesome trading day. Frankie, I apologize I didn't get to LUMN. I will get to some of this stuff later today at 3 o'clock. We will be very, very busy today. It is quad witching, and I will be taking you through that final hour, and I will be working on my haircut, I assure you. I'm going to go right over there and just get out one of those knives and just start going to town. Don's coming up at 9:30. I hope everybody has... Ah, no! It's triple witching today. Ah! Get the knife and cut off my hand. All right, everybody. Don's coming up in a minute. I hope you guys have a great day. I'll catch up with you in a bit.